What's good, y'all? It's your boy Zone. I'm back with another video. Now, hey, before we start this video, I gotta let y'all know something. I just dropped a course on gold, right? It's basically going over every single strategy that I use when I'm trading gold, right? I got like 7 or 8 different techniques in there right now on the course. You can now purchase it on my website. I know a lot of y'all been asking me about that. And I also reopened the signals chat. The signals chat is back open. I had closed it because I just moved into a new apartment, and I had to, I was busy getting a whole bunch of stuff together, and my mind wasn't focused on trading. So I wasn't sending signals for like a week and a half or 2 weeks, something like that. But yeah, we fully back now. I plan on going crazy with the signals. So if you want to sign up, you can. We back in the groove of things. I'm trading full time again, but we about to go over this gold strategy that I use. It's one of the strategies that's in my course. I'm just gonna be breaking it down like live for y'all for a trade that I actually took. But if y'all want the other strategies, y'all gotta pay for the course. That's just how it is. But yeah, make sure y'all sub to the channel, hit the like button, and turn on the post notifications, cause your boy almost had 20K subs and we trying to get there quick. But let's hop into the video though. So we get on the charts right quick, right? So if we get on the charts right quick, I'm about to show y'all this strategy that's going, you know what I'm saying? That was a quick trade that I took the other day. I actually took like 2 trades off this setup, but I used one trade as a confirmation for the other one. So this is like a W trade. Anyway, during the New York session 2 days ago, this trade, the market had pushed up, right? It did one huge spike up off a big sell-off, but it never gave a pullback, right? Because usually when the market push up like this and break highs, right, it'll come back and retest something on the fib, like one of these fib levels. It'll come back and touch before it continues up, right? But it never actually came and filled. It never came back on the fib, right? Because how I would have drew this normally, it would look like this. I would take the fib to here, right? And I would be expecting it to, once price started to pull back, I would be taking it off either the 70, the 79, or the 62 level, right? But it never came back down here. So what did I do? I waited until the next day, right? And I took the trade like this. So instead of me just covering this small range right here for this 1 day worth of price action, right? This day right here, I actually extended it all the way until the high of the next day, right? So now we got yesterday's, we got the, if we just looking at the market from, okay, we this is us today, right? We got the market going from yesterday to up here on this fib, right? So what am I waiting on? I'm waiting for the market to come either to the 62 or the 70 for me to take an entry, right? But how can we make the confirmation even stronger? Now, the market had during Asia session, I guess this was, it was just like consolidating around this area right here, right? So what I do is I draw me up a zone based off this price action, right? And let's say none of this had happened yet. All we know is that prices up here is coming down, right? We not looking for sales, right? Because we know that the market need to make some type of correction off this push right here, right? So I drew up these zones. I drew up this one zone right here, like covering all of these wicks. And I don't draw my zone like to cover exactly every single wick. Like I'll just draw it to cover the most, right? So as long as each one of them is touching, this is basically where I'm looking for some type of price action at. Okay, so let's extend this out just so, because we always want to have it extended so that when price reach that area, we can know what to do, right? So let's zoom in. Price come down to the 62 on the fib, right? It break through it. So this was the zone that we had marked up. It breaks through the zone, right? Now, a breakout trader would have said, okay, cool, it just broke this low, right? It just took out these lows right here. Let's sell. But if you knew what happened yesterday and knew that the market didn't give no fib trade, right, and you drew your fib from here to here, Now you got a clearer understanding of why the market gave this engulfing candle right here, right? So once I seen this engulfing candle off the 70, I straight took the trade here, right? I think I might have entered it off of this candle right here, this inverted hammer, or this hammer candle, whichever one you want to call it. I took it off of this, right? And it was just for a small pullback, right? Because gold is in an overall downtrend right now, but I know the market needed to make a correction off of this, right? I know it needed to hit some type of fib level before, you know, I knew it was going to struggle at this area, right? Because this was just too much bullishness without giving no type of pullback. So when the market came back down here to the 70 and the 62, I just took the trade, especially when I seen it throwing all of these wicks right here, right? I seen the market throwing all of these wicks, wick here, it broke, engulfing candle, wick, right? It's just no reason that you shouldn't take this trade. Now, how you get in? Like I said, you could have entered it straight off the engulfing right here with the 35 pip stop, right? I always put my stop loss at either the body or the wick, right? Because I look at it like if it's gonna come down to the body, you know what I'm saying, it's gonna touch the wick too sometimes, like most of the time, especially with gold, because gold is so volatile. Like, it's not gonna come here and then not come here. Sometimes it happens like that, but not all the time, right? So 35 pip stop for an 80 pip gain, right? And say you held it to the next day, you ended up getting 100, right? So that's a 1 to 3 risk to reward ratio. You risk 30 pips, but you caught 100, right? Easy money. Now, this is one of the trade setups that I'm teaching in my group from people that might have, you know what I'm saying, been in a situation like this where they don't know which direction the market want to go, right? Because as you can see, after it bounced off this level, what is it doing? It's basically just consolidating. Now on gold, this is a lot of price action though, right? From here to here, this is like 130 pips. So it's money still being made off these moves, but if we look at it in hindsight, it's still just in a consolidation. It hasn't broken out anyway, right? So like I said, this is just one of the strategies that I teach in my course. If y'all want to get the rest of the strategies, y'all can always sign up for the course on my website. I'll even go to my website right now and show y'all exactly what to do. Let's look at it right quick. You go to XAUUSD.com. As you can see on the home screen, new gold course available now. You come down here, you're gonna see the course on the website for $250, but you're getting a lot of content, right? And if you want to sign up for the signals, you can always join the signals chat. Price on the signals went up because I was charging too low in the beginning, so I had to up my price, you know what I'm saying, make it worth my time. And it's only 2 plans on my site now, the course and then the 30-day subscription to the signals chat. So like I said, y'all can sign up for those if y'all want to. I'm gonna go ahead and end this video now. If you got any questions, you can always message me on Instagram, Telegram, anything like that. I'll see y'all in my next video. Make sure you like, share, subscribe, and yeah, that's it.